last couple of days, of course, we've been talking about the big stars of 2024, and one such company obviously is PG Electroplast. The stock has done really well, and the space that it operates in, the electronics manufacturing space, it's a red hot pocket in the market. Valuations have been going higher, but then order books are also swelling. So Vivek, why don't we take it away, because we have fresh news on PG Electroplast, right? In fact, the announcement, the latest announcement that came in is that they're getting into a venture, a pact with Whirlpool for manufacture of the washing machines as well. So actually, let's take the conversation with Mr. Vikas Gupta. He's the managing director of the company. Mr. Gupta, thank you very much for joining in, and season's greetings to you. It's been a fantastic year, I think, for PG Electroplast. Your shareholders will also be very, very happy. Let's start by understanding the contours of this latest announcement, the tie-up that you have with Whirlpool. What are the expectations in terms of the volumes you'll manufacture, what products, and what's the revenue estimation from this tie-up?
Greetings to all at CNBC TV 18. We have been in discussion with Whirlpool for this washing machine business for quite a while. And we are happy to announce that we have been able to convince them to look at outsourcing as an option. And we see a strong momentum in our washing machine business with this deal. And we are confident that we should be able to maintain a CAGR of almost around 30 to 40% for coming 3-4 years in our washing machine business as well. So it is difficult for me to give you a client-specific revenue numbers, as we are bound by the NDA norms in that. But definitely the overall deal will be very, very helpful to us in talking to other customers as well, to convince them to look at the outsourcing in the mass segment products, where the pricing is always a pressure point for all the brands.
Okay, Mr. Gupta, you've already been working with Whirlpool for other segments. So overall, as a percentage of total revenues, give us two segments. Number one, what does Whirlpool currently contribute? If you could give us a client-specific breakup. And secondly, as a percentage of your overall top line, what does washing machines contribute? Because at the end of Q2, you actually gave us an upgraded guidance for FY25. So on the back of that, if you could give us a breakup of where exactly are you seeing accelerated growth coming in?
For us, in our product category, which is almost around 70% of our overall company revenue, washing machine is almost around 20% of that. So when we look at the overall revenue from washing machine, we are given a guidance that we will be doing a revenue of almost around 450 to 500 crores in a washing machine category in the current financial year. So, and the overall guidance for the revenue is, still stands at 4,250 crores. We might be updating our revenue guidance going forward once we release the results for quarter 3 of FY25.
Okay, all right. So that would be interesting that you could be upping your revenue guidance as well. Earlier, I think what the outlook was, and correct me if I'm wrong, I mean, earlier you were looking at revenues of around 4,200, 4,300 crores for the year, and that could be revised higher now, you're saying?
So, Surabhi, I have said that we will be updating our revenue guidance. I'll keep it that way for now. And the revenue guidance earlier that we guided was for almost around 4,250 crores. And we will provide an update as we go forward. So the run rate is looking good, and we should be updating on that once we release the quarter 3 results.
Okay, so Mr. Gupta, what we understand from what you've said currently is that Q3 has tracked well. You're expecting Q4 also to be good. So some slight upgraded guidance may be in the offing as far as FY25 is concerned. You've also maintained that you will do a CAGR of close to 35 to 40% in the coming few years. So FY26, have you taken into account the contributed financials from Whirlpool, or would we see some upgrade coming in there? And internally, have you worked out any guidance for FY26?
So Vivek, we will be surely making a guidance on the FY26 numbers also. Our teams are already working on it and doing their number crunching. And this Whirlpool deal will definitely help us in further boosting up our guidance for FY26. But we will have to wait for a few more months. I think we should be making a specific guidance on FY26 once we close FY25 numbers and we make an announcement on our FY25 numbers. At the same time, we will be releasing a guidance on FY26 numbers also. But we are confident that we should be able to maintain a CAGR of 35-40% very, very easily for the coming FY26, FY27 as well.
Just to understand, washing machines, like you said, I think are 20% of your business, I mean, the contribution that's coming in over there. Will you have to add additional capacity to service the Whirlpool contract? Or is the current capacity enough? And Whirlpool itself would have, I'm guessing they are working with multiple contract manufacturers. So how much of their business incrementally could be coming to PG?
So we are in process of expanding our capacities in washing machine business as well as in our AC business as well. So currently we have a capex guidance of almost around 370 to 380 crores for FY25, which we are closing. And for FY26, we'll be making a capex guidance. But definitely we are increasing our capacity for washing machines to almost 2.4 million units per annum. The Whirlpool, in case of washing machine, is working currently only on with PG Electroplast. So for washing machine, I don't think Whirlpool has any other contract manufacturer in washing machine space. So definitely, the washing machine business will get a further boost with this deal from Whirlpool. And we are still working with Whirlpool to figure out the exact numbers and how it will play out in coming 2-3 years.
Okay, Mr. Gupta, a couple of questions from our end. Number one, on 21st November, you informed the exchanges that you are entering into the EV space and with an African company. So what exactly is the scope of work you'll be doing over there? What will be the kind of contribution you're expecting from these particular verticals? And secondly, FY26, any kind of value unlocking we can expect, because a couple of peers like Amber Enterprises are actually looking at demerging some of the verticals. They do indicate, there could be some value unlocking, especially for investors, given specific business lines that they are present in.
Coming to the EV bike announcement, we have tied up into a manufacturing agreement with Spiro, which is an Africa-based company. And we will be undertaking a manufacturing for a complete EV bike, as well as the battery packs for them. And we expect to start the production by, I think, before the end of first quarter of FY26. We should be starting the trial production for them. And we are looking at a revenue of almost around 500 to 600 crores in the first 2 years of within the 2 years of our operations for EV bikes. So we are very bullish on this business segment as well, and it will further boost up the numbers for our FY26 revenue, which will be giving guidance in due course of time.
Got it. So, Mr. Gupta, as we wind up, give us sort of big picture vision. And I'm now not talking about Q4 or Q1, but say, something that an investor can work with for 12 to 18 months down the line, because there's so many businesses that are now firing up for you, right? There is washing machines, there's air conditioners like we spoke, there is, there's obviously this, the battery pack business, EV that we just spoke about. So on a whole, what will your revenue pie look like, say, 12 months down the line? And as you add these newer businesses in, what will the margin profile of the company be? What is it that you're aiming for? Currently, I think as of the second quarter, you were at around between 8 and 8.5% margin. What will the company look like in terms of the revenue mix and the margin profile 12 months down the line?
So, Surbhi, what I can say is that all the product segments that we are working currently, we see a very large and very huge opportunity in all the businesses that we are in. And we hope and we feel that it is possible for us to achieve a CAGR of 35 to 40% over a period of the next 3-4 years. And we translate if this CAGR growth of 30-35% into 3 years. So we can see our revenue doubling almost in next 3 years. So we are confident and we are aligning our resources, our capacities based on these projections. And we are working to harness all the opportunities that are coming in our way. And we are building on that. So we are extremely confident in all the product categories that we are working on.
So 35 to 40% CAGR revenue growth over 3 years. And what about the margin profile? What would you aspire for as all these products get into the mix?
I would not like to give a very strong positivity on that margin profile. We will like to maintain a margin profile of around 7.5 to 8%. We have to see how the competitive landscape also operates. And please understand, this still business is a very commoditized business. And we are into a manufacturing business where the margins cannot be very large. But definitely, we try to maintain a ROC of almost around 18 to 20%. That is what our guardrails are there for any kind of capital allocation that we do in our business. So we feel that the margin profile will be similar to what we have right now going forward as well.
Thank you so much, Mr. Gupta, for joining us and giving us a sense of the partnership, the opportunity that you have with Whirlpool and also the way forward. Wishing you and your team a very happy 2025. Well, let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.